Gold and silver are soaring to fresh record highs today. This is not a normal market move. As of this session, gold has climbed above $4,600 an ounce, breaking all-time records again. Silver is trading near the mid-$80 level, marking one of the most dramatic rallies in memory. The reason for this surge is not random. It's the result of rising safe haven demand across global markets. This demand is being driven by escalating geopolitical and economic tensions. Heightened conflict involving Venezuela and broader global uncertainty are key factors. Gold and silver are fundamentally different from stocks and bonds. They are stores of value, assets investors flock to when confidence in traditional markets falters. The most obvious catalyst today is the escalating geopolitical stress between the United States and Venezuela. Recently, the United States captured Venezuelan President Nicolas Maduro. This move shocked markets and intensified risk aversion among investors. Venezuela holds the largest proven oil reserves in the world, making its stability critical to global energy markets. This political disruption is amplifying fear and uncertainty in global markets. Investors are being nudged into gold and silver as safety assets. When geopolitical tensions rise, gold is typically the first asset to benefit. But right now, silver is responding even more sharply. Silver's rally is unusual and pronounced. It reflects both safe haven appeal and structural pressures in the market beyond geopolitics. Gold has surged to new highs, touching around $4,600 per ounce. Investors are piling in due to mounting risks in the global economy, from political instability to monetary policy uncertainty. Today's rally is influenced by geopolitical risk, fears about a weakening US dollar, and expectations that the Federal Reserve may keep interest rates lower for longer. When rates are low, the opportunity cost of holding gold, which pays no yield, decreases. This makes gold more attractive relative to yield-bearing assets. In countries like India, gold has hit local record highs. 24-karat gold is trading over $1,575 per 10 grams. Gold is what economists call a safe haven asset. During times of crisis, investors move money into gold to protect their wealth. This isn't a short-term blip. Gold's price performance over the past year is one of the strongest on record. Silver is rallying even harder than gold. It acts like gold on steroids because it's both a precious metal and a critical industrial commodity. As of today, silver prices are trading near $80 plus per ounce. In some markets, prices have reached record highs. Silver's rally is supported by multiple factors, not just geopolitical risk. Deep supply constraints and surging industrial demand are key drivers. Persistent supply deficits. Most silver is mined as a byproduct of copper, lead, and zinc. Mine output has been flat or declining, even as demand rises. This has resulted in repeated annual deficits. Demand has consistently outstripped supply year after year. Industrial demand surge. Silver is essential for solar panels, electric vehicles, 5G infrastructure, AI data centers, and medical technology. Solar energy alone consumes hundreds of millions of ounces annually. Silver's unmatched conductivity means there are few substitutes, so demand keeps growing. Technological growth and AI. Emerging technologies require silver for connectivity and heat management. Data centers supporting AI workloads use more silver per unit than older systems. This drives incremental industrial demand that is largely price insensitive. Geographic market shifts. Global silver inventories are low. Major delivery hubs in London, Shanghai, and New York have drawn down stock as buyers physically take metal. Physical shortages, not just speculation, are tightening markets. Export controls and policy impacts. China, the world's largest silver producer, has introduced export licensing requirements. These restrictions effectively reduce global availability. This tightens supply outside China and pushes global prices up. This dual role, safe haven and industrial commodity, amplifies silver's price moves. Some metrics suggest silver's market capitalization now rivals major global corporations. In one analysis, silver's market cap even exceeded Apple's. The capture of Venezuela's president triggered risk aversion across financial markets. When political stability fractures in a country with massive natural resources, confidence falters. Gold and silver shot up because investors are hedging against further conflict, instability in commodities, and global uncertainty. Broader geopolitical stress, including tensions in the Middle East and concerns about central bank independence, is also prompting safe haven buying. Expectations of interest rate cuts weaken the US dollar, making precious metals more attractive. Lower interest rates reduce the opportunity cost of holding gold or silver. Combined with fear in markets, this creates a powerful rally dynamic. Silver's story is structural, not just short-term noise. Experts project high demand throughout 2026 and beyond. Demand from clean technology, renewable energy, and electrification is expected to outpace mining supply growth. Global silver demand may exceed supply again in 2026. Above-ground inventories have declined sharply as physical metal is consumed by industry and investors. Analysts believe silver could continue climbing. Some suggest it may even challenge $100 per ounce if trends persist. These predictions are rooted in supply-demand fundamentals, not hype. Safe haven demand remains active. Investors use silver as a hedge against inflation and a diversification tool during uncertain times. This dual dynamic, industrial plus investment demand, makes silver one of the most interesting commodities today. Key takeaways for investors: silver is far more volatile than gold. Industrial demand continues to grow with solar panels, EVs, and AI infrastructure consuming large amounts. Supply cannot easily respond. Most silver is mined as a byproduct, and new deposits take years to develop. Physical shortages matter. Low inventories make prices sensitive to disruption from policy, geopolitics, or logistics. This rally isn't just headline chasing. Historic price moves reflect structural shifts and changes in investor psychology. In sum, gold and silver are soaring because investors are seeking safety in a world full of uncertainty. From Venezuela to global economic and monetary risks, precious metals are center stage. Silver's rally goes beyond fear alone. Structural supply deficits, explosive industrial demand, and tight inventories are driving real global imbalances. This is a rare moment. Alignment of risk, demand, and constrained supply pushing precious metals to historic highs. As we move deeper into 2026, the question is, has silver just begun its climb, or is this a new persistent regime for precious metals? Only time will tell. The fundamentals suggest we are witnessing one of the most significant precious metals environments in years. Thanks for watching this update on gold and silver here on the Silver Thesis channel. If you found this video helpful, make sure to like, subscribe, and hit the notification bell so you don't miss our latest precious metals insights. Join our community of investors who are staying ahead of the markets, and let's continue following the silver story together.